All right, let's talk stocks. We'll look at the charts. We're going to use technical analysis to look for trade setups and trade ideas. Drop me a thumbs up if you guys are getting value out of the channel. Leave me a comment below. And then additionally, if you're interested in getting an extra trade ideas, trade insights, market commentary, private member group, $5 a month, cancel anytime, check it out. Link in the description below. All right, so NVDA, big sell-off today, a decent sell-off, down 5%. Big, really like a bearish engulfing candle ultimately. There's a slight kind of bearish rising wedge that was going on. And we're seeing, that a break from that wedge. So the bigger picture though, from my perspective, we've got there's really two key levels. There is this level here, which was resistance. We had kind of a downtrend line, and we broke out for sure. That's definitely a breakout. So, you can't get too bearish. We could come in and test that and back test that, and then buyers will step in and rally from there. So, there's no strong technical damage going on right now, except for maybe on the shorter, the really short time frame where it's broke this little bearish rising wedge. But the bigger picture on the daily chart, no big technical damage. So you have that downtrend line, and then you also have just the kind of uptrend line coming off of October 2022. This thing's been in a uptrend since, and there's no break of that. So again, can't get too bearish on that one, but in general, we might come down a little lower, and then we'll see. All right, if we break below these supports, start breaking some supports, that's going to be larger sell signals. Until then, it's going to be support. So buyers will likely be sitting there trying to buy the dip. Now, it's a double top. I mean, that is the pattern. You've got this double top going on. But I'm not a huge believer in double tops typically. Usually when you get close enough to a double top, they're going to pop that top and make a new divergent high. So I'm not, in general, like maybe you can't tell, but I'm not looking to really short this thing for anything more than just kind of short-term trades. All right. I think you could short it down to here, down to this support level, cover your short. And then obviously if it breaks that's going to technically change, and we'll look for more of a longer term short. But until then, you'd want to cover at support. So that's NVDA. That's the one that's kind of the big mover today. When I look at the big tech stocks, that's the big mover. Apple's up. So yeah, in general, not much change. I mean, here's the triple Qs. You do have this bearish engulfing. All right, as of right now, there's a bearish engulfing candle. So you could trade that as the top. You also, again, if I just go back and look, this bearish engulfing right here has marked the high. It's marked the top of the triple Qs. And, the two scenarios that I see playing out, all right, could go either way, of course, but one is this bearish engulfing holds as the top, all right? Again, when you have bearish engulfing candles, you trade them as if they're the top of that move. And it depends on the time frame, of course, and you want to look for them at the end of extended uptrends. And that's for sure, boom, big uptrend and a bearish engulfing. All right. So that's what you look for. And we also had negative divergence. So everything was there for telling us that is a top that could last or should last. If they pop it, then it's not the top. So you basically can short that bearish engulfing with a stop slightly ahead, slightly above, and look for a daily close above there to stop out. Otherwise, you just trade that as the top and ride it down. So that is kind of what we got going on. We're close enough that yeah, they could pop it, but equally it is a bearish engulfing. If you're just a purely technical trader, then you just would want to have, if you're shorting, especially for a long-term time frame. Now, I don't do that. I did short this bearish engulfing, but we covered right down here. I covered on August 5th. And basically that was support. All right, rally up, cover at support, and here equally, if we're going to come down to support, then you'd want to cover down there until you break support. You'd want to cover. So it could go either way. ultimately, it's technically objective to short on a bearish engulfing right here at the high. We're just off those highs right there. If it's going to hold, then that is the top, and you ride that down. If they pop it and you get a daily close above there, it's not the top, and you're likely going to go on and make another leg higher. So we'll see. And then the SPY, the S&P 500, again, bearish rising wedge. All right, clean and clear bearish rising wedge. Because it's such an obvious bearish rising wedge with negative divergence, all right, it's very, very obvious. Then I think it makes sense to see this kind of price action here where they're popping the upside of the wedge. Yesterday, they closed above the wedge. To me, that looks like stop raid price action. And, I think they could pop it again. But in general, I think this right up here is stop raid price action. And we're going to roll over and sell off. So look for big rejection candle, bearish engulfing, something like that. Maybe it comes today. But in general, this price action looks like a stop raid. So I do think we're going to head lower. And the measured target of this move is the widest part of the wedge. All right. And depending on where we break the wedge, let's say it comes today or tomorrow, to me, it looks like it's setting us up for a push down to about 536 and maybe the 200-day moving average, depending on how long it takes. Gold miners, GDX, still within this big bearish rising wedge. All right. That's just continuing to develop. It does have negative divergence. I've got it marked out like a big mess down there, but in general, momentum is dropping off. You've got negative divergence, momentum dropping while price is going higher. Tells me that, and it's a bearish rising wedge, tells me we're going to go lower soon. So you need to see a break of the support in order to trigger kind of the larger sell signal on the gold miners. But then I got ones like Newmont, which is the largest holding in GDX, which already broke. It had a bearish rising wedge here, you can see, with negative divergence. It broke, it hit the first level of support, and it's back testing. So it's actually an objective short right there. You're close enough, though, to these highs. I think they're probably going to pop these highs and put in a new divergent high and then roll over. So what I personally would be waiting for before, it's objective to short here at this trendline resistance. But I'm going to wait for a rejection candle, all right? Some sort of an impulsive sell-off rejection candle to trigger for my sell signal. So if they want to pop these highs, great. And then ultimately I'd look for that big rejection sell candle in order to short this thing. And then this will come down, and that's very likely. And then GDX will very likely break that wedge that I just showed. Financials, here's your XLF. They're saying a decent day today, but a couple things I'm kind of keeping an eye on. One, you can see you're rallying here. Look at volume, though. Volume's just dropping off. So that's a volume divergence where you have price moving up and there's non-confirmation. Volume does not confirm that there's just a rush to buy these things by big money. Tells me that it's actually, retail traders basically buying their earnings reports. And then you do have negative divergence. You'll see here the RSI continuing lower, and the PPO really has divergence now. So they both have them. They're not confirmed because if I zoom in on the RSI, it's still pointed up. So if the buyers stay there and the momentum continues to rise, you're going to burn through divergence. You need to see that turn down to confirm the divergence. And then going to the PPO, same with that one. You'd want to see this start to make a bearish crossover and turn down to help confirm the divergence. So we have conditions, but we don't have enough to really short this thing, the financials. So the big one you're going to want to watch, obviously, JP Morgan. And, I just don't see enough there that tells me it's a short. I mean, you're making a slightly new high now. Again, it is a divergent high. So if I just roll that out, you can see momentum is not able to keep up with price. So that tells me that there's less and less participation in this move up. So we need to see a sell signal, and we just don't have that yet. So those are on watch. Home builders, I mean, this is PHM. It's a home builder, but it's in this bearish rising wedge as well. So you can see support, kind of stepped in there. Traded there for a few days, but it held, and it's rallying today. So no sell signals, but you do have a bearish setup. It is, a bearish rising wedge pattern. You do have some negative divergence showing up on both momentum indicators, and no sell signals. So, I mean, it can grind within this wedge a little higher, but momentum is dropping. So ultimately, very soon you're likely going to get some sort of a sell signal. And the thing is, a lot of people ask me, well, why wouldn't I just ride this long? Well, because here's the thing. Very often, you're not going to just get the nice, clean sell signal that you'd be looking for. If you're long, very often they're not going to just come down and then just intraday break support and say, okay, tops in, go ahead and get out, take your profit. It's usually not the way it works. Usually it's going to come in the form of like a gap down where it's going to trap kind of the Johnny come lately people to the in the long position. So that's why it's not objective to go long, and it's really more objective to just kind of do nothing and then wait for that sell signal and the break of support. Costco, another objective short setup, but again, not actionable. We can't just short this thing because we have a setup. But in general, on the daily chart, you got support, 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 and we also have a bearish rising wedge. We're wedging. We have negative divergence. Momentum's dropping. It's a great setup. I mean, it's a very clean chart. We just don't have a break of support. We're kind of just grinding around. You can see we're just kind of grinding around right here. And since we're still within that wedge, they could push it up to the top of the wedge. So we don't want to short this thing. And, and we're close enough to support there. So just watching and waiting on that one. A long trade idea. This is NTR. Again, I've covered it multiple videos, but you have a clean downtrend, all right? And we broke out. When we broke out, we were building bullish divergence. So you can see momentum building, going higher, and yet price going lower. So breakout, backtest 1, backtest 2. And we got about 2 solid backtests, and then also put in this other bullish falling wedge. Broke out. It looks like there's some support from what I can tell right about 47.30. So I don't know. It looks like it wants to come in and test that again from above, because it hit the 200 day just recently. You can see they tested the 200. So far that's failed. And so you're likely going to come back down to support. So the 200's resistance and support is about that 47.30. And you're likely going to kind of chop around in this zone and work our way back to the 200. Ultimately, I think it breaks above the 200 and then continues its move higher. So this is a long trade. I'm long this one. It's not objective to go long right here, but if you come down to this 47.30 area, that would be an objective support zone where you could add or initiate a position. Here's another long setup, very similar to NTH or NTR, I guess. But again, this is MOS. It's a agricultural company. Bullish falling wedge. All right, my line's off a little because this charting platform loves to tweak my lines. But in general, bullish falling wedge. You can see it. It's pretty obvious. And then as I look at the momentum, bullish momentum. I mean, look at that momentum. It's just been building for quite a while. Momentum keeps going up and price keeps going down. So we're still within the wedge. There is no buy signal, and that will remain as long as we're within the wedge. But keep an eye on it. We start to break out above some of these resistance levels. All right, and the 200's just there too. So I think what's going to happen is you're probably at some time soon going to spike up to the 200 and kind of battle with that a little bit. Maybe, kind of grind around. And then ultimately you take out the 200. This thing should be off to the races. Measured target is the widest part of the wedge, which, I don't know, it's about right here. This is just kind of rough, but you mark that out. And depending on when we break out, because you got to know, you take it to the point where you break out, could be a push up to, 37.50 or so. So there's a bullish setup. It's not actionable yet. Okay, that's really all I got for today. There's not a huge change, technically at least, and I'm not seeing big signs of really actionable trades going on today. I think there's short-term trading opportunities here and there, but nothing that's like really major to go through. So going to continue to kind of watch it. I pointed out some key levels on different trade ideas and the markets. So we'll just continue to watch it, and I'll catch you guys on the next one.